to this public lecture, which seems to make a case for the taxation of unusual incomes. Of course, like you would have guessed, the title is Personal Income Tax, a Case for Taxation of Unusual Income. Now, this has become very necessary in view of where we have found ourselves in this nation at this time. Government has made it clear that it is interested in diversifying the revenue base of the country. Before now, oil had been the mainstay of the economy. And so we had always depended on the revenue from oil. But several factors have affected the impact of revenue from oil revenue. And so government is looking away, and of course the alternative is to look at tax revenue. And progressively from 2017, there has been an increase in non-oil tax revenue, while the revenue from oil itself has been dwindling. So that is where we have found ourselves. And we are saying that we could still do better if we are more creative and innovative in our thinking. Next slide. Can we go to the next slide, please? The next one. Yes. Now, somebody made a very profound statement in 1789 in a letter to Jean-Baptiste Leroy. It said, and I quote, "Our new constitution is now established and has an appearance that promises permanence. But in this world, nothing can be said to be certain except death and taxes. And believe you me, those two things are constant. And really, there is nothing you can do about them. Taxes, yes, you may say some people are not in the tax net, that they are tax anonymous. You are correct, but they still pay taxes. They may not be paying direct taxes, but they pay indirect taxes. So at every point in time that they make a purchase, there is an element of tax in that purchase. So you cannot escape it. Therefore, irrespective of your income, your status, or the tax bracket, everybody pays their dues, taxes, at some point. Interestingly, it will appear that there is no limit to when or how either may occur. Very interesting. Now, before I go further, let me quickly add that the opinions expressed there are my personal views and do not in any way reflect or represent the views of the Tax Appeal Tribunal, where I am a chairman of the Lagos zone. So these are strictly my opinions. I think we should just get that straight. Okay, so let's move to the next slide. Next slide. Okay, the necessity for tax. Why do we need to collect taxes? So we have four at least 4 reasons here that we have highlighted. One, it provides a long-term, reliable, sustainable source of revenue. Like we said, you see, oil revenue is not sustainable. It has been said that oil is a finite resource. So at a point, it's going to run out. Or, like we have seen, there are times when you have a glut in the market, and then, oil becomes practically, has practically no value. So, but for tax, it offers you a long-term, reliable, sustainable source of revenue. It is the primary vehicle by which government funds itself. I mean, government doesn't come to you to ask for money to run their affairs, but they come to you in a different way. They collect taxes from you. And they use the taxes that they collect to run their affairs. It enables government fund essential services. There are some essential services that you find in every country. They are funded primarily by taxes. Some of the citizens may not on their own be able to afford those services. So government provides these services so that the less privileged, the underserved people in the society can also have access to those kind of essential services. It increases government's accountability to their citizens. Of course, when you pay tax, you want to follow up and find out exactly what your taxes are spent on. You want to know. You are not just passive about it because you are parting with your hard-earned money. So you want to be sure that, yes, they are spending that money, the right way. You want them to be accountable, to you, and it increases that and then it creates, some sort of citizen participation even in governance. Okay, so lastly, it provides a means of distributing and redistributing resources for the common good. I think I mentioned that when I was talking about it enables government to fund essential services. Yeah, that's what it does that also. So those are some of the reasons why taxes are necessary. Interestingly, there are people who believe that taxation is theft, and they hold very strongly to this view because in their own mind, tax is a compulsory payment that is levied on you, and they say that, oh, you don't pay taxes willingly, you pay because you have to pay it, and so they are taking your money from you forcefully. So they believe that taxation is actually theft. And of course, you know that nobody pays taxes smiling. When you're parting with your money, you don't smile. And, this is one of the reasons why you find people also wanting to know how their money has been expended. Now, the legitimacy of tax, the next slide. Now, you find that tax not only has constitutional validity, it also has, ecclesiastical validity. If you look at the book of Romans 13:7 for the Christians, I'm quoting from their Bible now. It says, "Pay your taxes and government fees to those who collect them." So, from time immemorial, and even from the biblical time, you will see that tax is a valid necessity. It will interest you to know that the very first organized form of taxation actually evolved from Africa in Egypt about 300, 1000 BC. I can't remember the exact Bible passage now, but there is a passage in the Bible where, Genesis 47, verse 36, which describes, the collection practices of the Egyptian kingdom, explaining that the Pharaoh would send officers to take 1/5 of all grain harvest as tax. So tax is very old. It's not a new thing. And interestingly, it actually started the organized one. The very first kind of organized tax came from Africa. Okay, so then you can also read Matthew 17:24-27. You will see Jesus' account, Jesus' experience with some tax officials. Then the constitutional validity, section 24F of the Constitution is very clear. He asks you as a citizen to declare your taxes accurately and promptly pay them. Okay? So then section 42, subsection 2A of the Constitution of the Federal Republic of Nigeria, the 1999 Constitution, that one, provides some sort of, or permits some degree of derogation from the right to private wealth or private property. When it says nothing in section 44(1) shall be construed as affecting any general law for the imposition or enforcement of any tax, rates, or duty, amongst others. So taxation is not theft. It has constitutional validity, and we have seen that from what we have just read. So what is tax? Exactly what is tax? Now, the definition that you would give to tax will depend on who you are, or your experience, or your perception. A number of people have attempted to define it, so you have so many definitions of tax. Now, there is no doubt that tax is a compulsory exaction of money by a public authority for public purposes. It is the raising of money for the purposes of government by means of contribution from individuals. That was the definition given by Chief Justice Ladan of the Australian Supreme Court. And then Black's Dictionary says it's a charge, usually monetary, imposed by government on persons, entities, transactions, or property to yield public revenue. It embraces all governmental impositions on the person, property, privileges, occupations, and enjoyment of the people, and includes duties, imposts, and excises. But you see, that definition I have a problem with it because there are some concepts that are analogous to tax, but which are not taxes. They share some similarities with taxes, like when you have levies, when you have penalties, you have charges, you have that's some dues, but they are not taxes. They are simply analogous to taxes. And that was a mistake that was made in 2003 when the study group, the tax study group, came up with a list of taxes in Nigeria. And I think they came up with about 120 taxes. And I'm like, wow, do we really have up to 120 taxes? Interestingly, we don't, because Professor Abiola Sani, is a professor of tax at the University of Lagos, who is a renowned tax practitioner, said that the study group made a mistake in their classification because they were looking at some concepts which are analogous to taxes, but which are not taxes. And that when you look at it critically, you'll see that we only have 18 taxes in Nigeria. Strictly speaking, 18. That's all we have. Just 18. Now, people talk about multiplicity of taxes, they talk about multiple taxes, and then, they lump things that are not taxes, and they call them taxes, and then they group everything together and say, these are all taxes. I think we need to disaggregate taxes and levies. They are not the same thing. Taxes are different from levies. So when we have this understanding, the issue of multiplicity of taxes will not arise. We simply just understand that, every level of government has taxing powers, except the local government. The state has taxing powers, the federal government has taxing powers. And so they are entitled, the states are entitled to create their own tax. In fact, they actually have inherent powers to tax. Federal government has enumerated powers to tax. And unfortunately, in Nigeria, the taxing powers is also mixed with the legislative power. So you can't separate legislative competence, to make laws from legislative, from power of taxation in Nigeria. Everything is lumped together in Nigeria. Okay, so Professor Abiola Sani is of the view that any compulsory payment for which there is no direct benefit will qualify as a tax, irrespective of the name or description, be it charges, land use charge, duties, stamp duties, custom and excise duty, or tenement. Thus, what determines whether a mandated payment is a tax is not its nomenclature or description. The revised National Tax Policy Document 2017 also recognizes this when it defines tax as any compulsory payment to government imposed by law without direct benefit or return of value or a service, whether it is called tax or not. And this is the correct conception of tax, which differentiates it from other forms of levies, other things that you may want to call taxes. In tax, there is no direct benefit. You pay your taxes, there's no guarantee that your roads will be charged. There's no guarantee that your hospital on your street will be equipped. There's no guarantee that government will do anything to you in return. But the other ones, you will find that there is a corresponding benefit that you derive from their payments. Okay, so that is what I need us to understand about the concept of tax. Can we go to the next slide? Now, you see, tax is ordinarily a communal burden, meaning that it's something that everybody let's go back, tax is a communal burden, please go back. Yeah, so now it's something that everybody has a role to play in. It should be spread because tax weight is heavy. It is like a yoke on your neck. So if they place the tax net on only a person's neck, it's going to break that person down. So you need to spread the burden, and that's why you talk in terms of the tax net, tax bracket. Everybody needs to pay their own tax. All right? So it is the duty of every enlightened and income-earning individuals to support government by payment of their taxes. No one should be taxed anonymous, especially if they make income. Nobody should be taxed anonymous. But you find that in Nigeria, almost about 70% of Nigerians are taxed anonymous. They are not even in the tax net. So this burden of taxation is borne by barely 30% of the working population. The burden of tax must be spread so everyone pays according to their earning capacity and nobody is overburdened. It is the responsibility of government to ensure everyone is brought into the tax system by well-considered taxing statutes based on sound policy of inclusion, which I guess is what government has been trying to do in every way. Almost everybody now has a tax certification number, which they are making it compulsory for you to have that. So it's a way of bringing people actually into the taxing. The next slide. So if government, which I call Caesar here now, is not to asphyxiate its citizens. Yeah, asphyxiate is to strangulate. So if government is not going to asphyxiate the citizens, you know, and when I say citizens, I mean the tax-paying citizens, those who are already in the bracket now who can't get out. If government is not going to kill them, then we must ensure that the bracket remains open and that the tax net keeps catching people. The tax authorities must become like the fishermen. You have to work and work and work and ensure that you catch enough fish so you can make good sales. You can't tire out. You can. All right, so that you don't end up killing the few people who are paying taxes by overburdening them with new taxes or increasing the rates, which is what we have been doing for a number of years. We keep increasing the rate or we keep bringing new taxes. And of course, government is going to introduce new, I mean, they're already considering it. They are working earnestly. There are some taxes that they want to introduce from what I understand. I will come back to it and let you know those things they are actually working on, which is likely going to increase the tax burden of those who are already in the tax net. Next slide. So, if we are not going to overburden those who are already in the net, or if we are not going to asphyxiate those who are already paying taxes, then we must be thinking of taxing some unusual incomes which before now we have never taken time, you know, to look at, to tax, that we are taking for granted because we just look elsewhere. You know, so before I continue, let me just take you back to what I said, that government is going to introduce some new, you know, taxes. The government proposal to Section 20 of the National Agency for Science and Engineering Infrastructure Act is supposed to introduce a 0.2% levy on companies with annual turnover or income of 100 million naira. I'm not sure if you're aware. I'm sure those of us who are running companies, you're already aware of this. Now, this is going to be another tax. It's going to be another tax burden on large companies. Let me call it burden. You know, so Then in addition, the Nigerian Customs Service has also proposed the return of a 1 naira 50 kobo levy on every liter of petroleum product brought into the country. Non-alcoholic beverages are also to be taxed, like alcoholic drinks and tobacco. The Controller General of Customs appeared before the House Committee, and this was part of the things that he was proposing. So for us not to kill those of us who are already in the tax net, there is a need for us to be creative, to be innovative in the way that we'll try to expand the tax net. So this is why today this lecture is on taxation of unusual income. Okay, so from that title, you will see there are 3 key expressions. One is unusual. What is the meaning of that? What is income? What is personal income tax? So let us quickly look at all these ones before we now move on. Next slide, please. Next slide. Now, the meaning of unusual, not commonly encountered, okay? And these are the synonyms: uncommon, abnormal, atypical, unexpected, surprising, unfamiliar, unwanted, different. So the kind of incomes that we are talking about are the ones that are uncommon, the ones that are not commonly encountered, the ones that are not that are abnormal, that are unexpected, they are surprising, they are unfamiliar. Okay, that's the kind of income that we're looking at. So what is income itself? Now the Black's Law Dictionary, next slide. The Black's Law Dictionary views income as the money or other form of payment that one receives, usually periodical, from employment, business, investment, royalties, gifts, and the likes. So you may want to also compare that with earnings and then with profit. Now, on the other hand, personal income refers to an individual's total earnings from wages, investment enterprises, and other ventures. It is the sum of all the incomes received by an individual or a household during a given period in a country during the year from all sources. Okay, so unusual income then is an uncommon, unexpected, unwanted money received by an individual as a result of or incidental to his employment, business, investment, or from any source in a given period in the country. Now, more often than not, unusual income will refer to taxation of illicit funds, illicit activities, or illegality. Now, you need to understand, next slide, that the personal income tax is a form of tax base. It is tax paid on all individual stream of income. In Nigeria, it can be understood in relation to chargeable income under the Personal Income Tax Act, which is the principal legislation on personal income tax. Section 3 of the Act subjects every taxable, Section 3 of the Act subjects every taxable person to tax in respect of gain, profit from any trade, business, profession, or vocation, as well as any salary, wage, fee, allowance, or other gain or profit from employment, including compensation, bonuses, premiums, benefits, or other perquisites allowed, given or granted by any person to an employee. Thus, any income of the nature identified above, which accrues to any class of persons defined as taxable persons, qualifies as personal income tax in Nigeria. Consequently, it can be safely said that Personal income tax is a tax imposed on incomes of individuals, families, communities, trustees, or an estate. Now, the administration of personal income tax is vested in the State Boards of Internal Revenue by and under the Personal Income Tax Act. Now, query, there's a question that I have here. Do governors and their deputies pay tax, or put differently, are taxes deducted from salaries and other qualifying allowances of governors and their deputies? And also this question also goes, to the president and his vice. Do they pay their taxes? Next slide. Now you need to understand, because we are looking at the legal and institutional framework for personal income tax. So the Personal Income Tax Act, as amended, is a substantive and principal legislation on taxation of personal incomes. See Section 1 of the Act. Relevant tax authority of the state is empowered to collect tax under Section 2 in accordance with the table set out in Schedule 6 of the Act for each year of assessment on worldwide income. So all your income, once you are a resident of Nigeria, your worldwide income, your every source of money that you make is taxable in Nigeria, subject to tax in Nigeria. Now, income for the purposes of the Act is as enumerated under Section 3. The word income is not purposefully defined under the Act. But Section 3(1) of the Act provides us, subject to the provisions of this Act, tax shall be payable for each year of assessment on the aggregate amount each of which is the income of every taxable person for the year from a source inside or outside Nigeria, including without restricting the generality of the following. So the Act goes on to list a number of things. It says, 1, a gain or profit from any trade, business, profession, or vocation for whatever period of time such trade, business, profession, or vocation may have been carried on or exercised. Now, there are so many of them, so you can look at Section 3 of the Personal Income Tax Act. But what I want to bring out is that the use of the word including in Section 3, subsection 1 of the Act shows that the category of income is not closed. The category of income that is subject to personal income tax is not closed. Therefore, Section 3(2)(b) of the Act says income is an amount deemed to be income under the Act. Okay? Okay, so that takes us back because next slide. Next slide. So we want to look at key to avoiding asphyxiation of the citizens. And we say the key is creative, which I mentioned earlier from the beginning, that the key is creative and innovative thinking. And of course, I've also said it, and I'm going to repeat it, that the approach here is to tax unusual incomes under the auspices of the Personal Income Tax Act. Now, for the purpose of this discourse, unusual incomes are incomes not traditionally subject to tax, even though they constitute incomes in the hands of the receivers. These include proceeds of or earnings from illegality, immorality, crimes, and other illicit activities. So we are limiting, for the purpose of this discourse, we are limiting our definition of unusual income to what I've mentioned. Now, unusual incomes have never been subject to tax, at least in Nigeria. So this set of persons in possession of these unusual incomes enjoys the best of two worlds. They benefit from their actions, rub it in the face of the ordinary law-abiding, tax-paying citizens, and they are not subject to tax on their unusual incomes. What a world. What a world. So now we are moving gradually to the essence, the key, the core of this discourse. taxation of unusual incomes, that is, proceeds or earnings from crime, illicit funds, or illegality in Nigeria. Please move to the next slide, and then jump and move to the slide after the next. Move to the next one, please. Okay. So there are certain incomes, taxation of which may raise the issue of morality. You know, Nigeria is a very high moral country, so to say. You know, we shout morality and then okay, so but let me leave that. Now, this is because the public may view the incomes as incomes earned from immoral activities, and taxing such may be seen as government sanctioning of immoral, illegal, and fraudulent acts. But we need to know that taxation is deeply immoral. Tax legislations they tax income from all sources. On its plain wording, the Act is not concerned with how that income is earned or generated. As far as the taxman is concerned, there is no dirty money. The mere fact that the income was earned through illegal means is immaterial and does not affect its taxation. 1 minute, please. Okay. So as far as the taxman is concerned, there's no dirty income. The mere fact that the income was earned through an illegal means is immaterial and does not affect its taxation. You may want to see the case of TSKJ 11 against FIRS, where the Tax Appeal Tribunal, relying on a South African case of CRR against Desago Bay Cigarette Limited, ruled that any trade or business used in Section 9 of CETA means it is immaterial that the trade or business was legal or illegal. This is perhaps the only case that I have come across that has even spoken at all about illegal taxation of anything illegal in Nigeria. The tribunal then held that receipts or accruable income is taxable whether it is legal or illegally acquired, or whether the company was properly incorporated or not. This is the best that we have done in Nigeria with respect to taxation of illegal incomes or incomes arising from illegal activities. We usually shy away from it, so we allow these people to get away, with it. Now, you will see that Section 3 of the Personal Income Act provides for the imposition of tax on incomes derived from a source attributable to Nigeria. This prescription is not restricted to legal income alone. We need to understand that. We need to understand that it's not limited to legal incomes alone. At least it's not so provided in any provisions of the Act. Thus, the Personal Income Tax Act, while not expressly providing for taxation of earnings and proceeds from illegal activities, does not forbid imposition of tax on them either. Okay? So, in this wise, income derived from prostitution, corrupt practices, yahoo, armed robbery, armed dealings, banditry, smuggling, drugs trafficking, these ordinarily are incomes within the tax net. Ordinarily, all of this, they fall within the tax net. Okay, so the taxman should be able to expand the tax base by bringing this income, which traditionally are viewed as illegitimate, into the tax bracket. And that's what we are saying. That we need to leave our high horse of morality and come down to the ground. We need to tackle this thing headlong. We need to tackle it headlong. Okay? All right, so theoretical framework of taxation of illicit funds, activities, or illegalities. Can we move to the next slide? Now, basically, there are two theories that we want to discuss here. One is the public policy theory. The second one is the rational choice theory. Now, the public policy theory posits that acts are injurious to the public and therefore must be subject to more burden. So acts that are injurious to the public must be subject to more burden. If proponents advocate for the denial of deductions on those transactions perceived as repugnant to public policy, we'll get to the issue of deduction, as we go on. The argument is that allowing illegal income, the benefit of deductions will encourage people to engage in illegal activities. Now, taxation of illegal income and disallowing deduction of expenses reduce the risk and incidence of illegal activities and crimes generally. Now, this is one school of thought on why income arising from illegal activities or businesses should be taxed. And I agree. The rational choice theory proceeds on the footing that people who engage in illegal activities tend to weigh the potential, because they do. And this is why some of them will not ordinarily want to disclose income from their illegal activities. They will not want to do it because when they do that, they will be exposing their criminal actions, and of course, they will be subject to other form of government sanction. Because of course, if you, for instance, if you are involved in drug peddling, you know that there are some sanctions that will come your way by virtue of some of the laws that we have, which regulate that kind of activity. So because of that, they are very unwilling to disclose that source when they are filing their returns, if they file any returns at all. And so they always weigh the risk. They know the risk involved. They know the risk. So they are usually very, very wary in disclosing such income. So those are the two theoretical framework of taxation on illicit funds. But then why, next slide. So why tax illegal incomes? Why? First, it is an attempt to hold the perpetrators accountable. So we need to tax it so we can hold them accountable for what they have done. It leads to lower level of illegal activities when you know that, yes, you'll be held accountable, and then, you have some sort of tax body on your neck. You will be very wary in going into illegalities. Then illegal income could arise, of course, from legal businesses, e.g. fraud, corruption, insider trading. Most people, when they get to political offices, what they simply do is that they use that office to engage in corrupt practices. Now, political appointment or political office itself is a legal thing, but you can turn it around, and what will proceed can be illegal. And that's what we find, in Nigeria with a lot of our political office holders. Recently, we heard that in Dubai about they traced some houses to some, not ordinary houses, very luxurious houses, to some Nigerian politicians, and then when you check what is their basic pay, you will be surprised to know that what they earn is not even enough to buy. And then you find one person having like how many? So, so people take advantage of their political offices. Okay, it serves as a disincentive to crimes and illegality. It ensures that the perpetrators cannot derive the full benefit of their misdeeds without paying what is due on it. There is the public policy that says that, a person should not benefit from his own wrong. If you don't tax these proceeds of illegality, then you are allowing those people to benefit from thereof. Okay? Because the taxation legal framework requires a taxpayer to disclose all his incomes from all sources. Now we have said it, the legal regime in Nigeria is silent on whether the source is legal or illegal. You have to file your returns. And when you file your returns, you are meant to disclose every income from every source. You shouldn't leave out one. Section 24F of the Constitution also imposes that obligation on you. All right, next slide. Now in Nigeria, corruption is so widespread. It has become an identifying national feature of the nation. In 2012, Nigeria was estimated to have lost about $400 billion to corruption since independence. In 2018, it was ranked 144th in the 180 countries listed in Transparency International's Corruption Index. Interestingly, the Nigerian government continues to insist that its fight against corruption is progressing in all sectors, while members of the political class have always been allegedly guilty of corrupt practices. Now, two cases underscore the prevalence of corrupt practices amongst the political class. Only recently, the Supreme Court affirmed the 10-year jail term passed on the former governor of Plateau State, Joshua Darie, who was convicted of criminal misappropriation and criminal breach of trust. Mr. Darie was said to have looted 2 billion naira public funds during his tenure as Plateau governor between 1999 and 2007. The proceeds of this corruption case ought to be subject to personal income tax in the hands of Darie, since it constitutes an income and the act does not discriminate between incomes or amongst incomes. All income is income. Now, the fact that a receipt is illegal, immoral, illicit, ill-gotten, does not prevent it from being characterized as ordinary. It's an ordinary income. If the income is charged, let me shock you. If this 2 billion that we're talking about is charged to personal income tax in line with Schedule 6 of the Act, the tax liability of the former governor will come to about 378 million naira, giving a consolidated relief allowance of 21%, while subjecting the balance of 79% to tax. What are we saying? What we are saying is this: when anybody is convicted of corruption, and we are talking in terms of money, the amount involved is a receipt in that person's hand. We must not allow that person to go with that money without paying tax on it, because it is receipt. It came into that fund by reason of the office that he has held. So it is an income. It's a receipt. It's the money coming to him, even though it's a proceed of his corrupt practice. Okay? Now, you also recall, next slide, you also recall that the Federal High Court had in December 2019 convicted the Senate Chief Whip and former governor of Abia State, Orji Uzor Kalu, as well as one Mr. Ude Ogu, who was the Director of Finance in Abia State Government House during Kalu's administration as governor of Abia State. They were convicted of embezzlement to the tune of 7.56 billion naira. And then they were sentenced to 12 years imprisonment. However, of course, you know, in a surprising turn of events, the Supreme Court overturned the judgment on the ground that Justice Mohammed Idris, who delivered judgment, was already sworn in as a justice of the Court of Appeal at the time, and so could not act in the capacity of a judge of the High Court. So the Supreme Court directed that the case be reassigned for trial. But let's assume that there had been a final conviction okay, the 7.5 billion, when you subject it to tax, it will yield 1.433 billion naira to the coffers of that state. So when we do not tax proceeds of corruption, we are losing money. The state is losing good money. And the state is losing on two sides. Now, you know that ordinarily criminal conviction would not attract, in most cases, it does not attract you having to pay back the money. Once you have been convicted, the money is lost. Except, of course, there has been some kind of plea bargaining. And then there are different kinds of plea bargaining. So if there has been some sort of plea bargaining and the man says, okay, well, I've been convicted of stealing 100,000 naira, I'm willing to return, I said 100,000, I'm willing to return 50,000. And for some reason, the prosecution is agreeable to that. Now, that 50,000 naira in his hand, which he has not returned, must be subject to income tax, to personal income tax. In actual fact, the other 50,000 naira that he also returned should be subject to income tax in his hand. And there is an authority for that. There is an American case which says that because before the conviction, he had dominion of that money. So to the extent that he had dominion of that money, he should pay tax on it. So it does not matter whether he now refunded the whole money to the coffers of the states or there has been some plea bargaining. That American case says that it should be subject to personal income tax in respect of the total amount. So this is the argument that we are making. This is the things that we should be looking at. And of course, in every state, you'll find people who are convicted at different levels, local government levels, state level, of this. There's so many cases being handled by EFCC, by the other agency. I've forgotten the name of the other, sorry, I can't remember the name, but so the number of corruption cases that we have, I mean, if we can just look beyond the ordinary, we will see that we can turn these things around and make good money for government as taxes from these things. Okay, now next slide. Prostitution itself. Prostitution itself is another good source, and then we don't even look at it. Interestingly, when you look at the criminal code of Nigeria, it does not seem to make prostitution itself illegal. Now you can go and look at chapter 21, I believe, of the criminal code, which it deals with offenses against immoralities. You'll be surprised to note that that act does not in any way make prostitution illegal. What it makes illegal is for anybody to pimp a woman or a lady. So what is criminalized under our law? At least as far as the criminal code is concerned, I don't know what we have under the penal code, which operates in the north. As far as the criminal code is concerned, what is penalized or what is criminalized is the activity of pimping. So technically, it will seem that prostitution itself is not criminalized in Nigeria. Let me shock you. Prostitution is as old as the world. In fact, it has been said to be the oldest profession. So it is a profession. I remember that Section 3 taxes income from profession. So prostitution, it's commonplace. It's almost everywhere. And then you find that a country like Holland, they have been enjoying proceeds of tax, from activities of prostitutes. And I will also tell you that in Nigeria, as of 2019, Nigeria was said to have about 410,000 commercial sex workers. Is another name for prostitutes. Worldwide, as at 2012, it was said that we had between 40 and 42 million prostitutes in the world. Now, under Section 32D of the Act, Personal Income Tax, employment is defined to include any service rendered by any person in return for gains or profits. And here also you will see that the category of employment too is not closed. So whatever that you do, any service that you render in return for gains or profit, that is an employment. So once any service is rendered which results in gains or profits, that service qualifies as employment, and its gains or profits are taxable under the Act. Sex workers render services for which they are compensated monetarily. Next slide. Now, for some reasons, the tax authorities have overlooked the incomes of prostitutes, otherwise called commercial sex workers, and they have excluded this from the tax net. Okay. Now, let me tell you that prostitution may be an immoral act, but the income from the activity is taxable, as tax does not concern itself with the morality of the source. We need to get that clear, and we need to pass this message across to those who are in place of effecting policy changes. Now, globally, the annual illicit proceeds of drugs and crime is estimated at $2 trillion by the United Nations Office on Drugs and Crimes. You will see that crime, therefore, is a profitable venture, more so since the income does not even attract tax. For our purpose, crime will be human smuggling, bribery, contraband, smuggling, extortion, fraud, illegal gambling, kidnapping, and drug trafficking. These are high-intensive sources of illicit incomes. People who are involved in this, they make a lot of money. They make a lot of money. I hope I still have enough time, because I've okay. All right, so next slide. Okay, so I have deliberately made this slide very wordy. I mean, it's almost looking like a write-up for reason, because I know that because of time constraint, we may not be able to go through everything, but so that on your own, when you sit back and then you read some of the things that I may have glossed over, you can look at them on your own also, because our time is very finite. Okay. All right, so in summary, an offense or a crime is a violation of law, yes, where an individual has therefore been convicted of an offense from which he has received a benefit from his criminal conduct, and a constitutional order equal to the amount of the benefit was not made. Such a person has benefited from his crime or from his criminal conduct. So for tax purposes, the proceeds of this crime should be seen as income, taxable under Section 3 of the Act. It is not enough that such a person is convicted. He must be made to pay income tax, where especially the proceeds of his crime is pecuniary. So otherwise, the state is a loser, and indeed, every tax-paying members of the society. Now, using the Darius case as an example, unless he's made to return the proceeds of his crime to the state coffers, either as a result of some plea bargaining or the provisions of the Administration of Criminal Justice Act 2015, he will have benefited from his crime. Now, even like I said, where he has struck some deal with the prosecuting authority and a portion of the ill-gotten income is returned to the state, he must be charged to personal income tax in respect of the portion not returned. tax is not averse to proceeds of crime. Okay. Penalties and interest on crime proceeds. Next slide. Now, penalty and interest become due once the tax which ought to be paid is not paid as and when due. By the provisions of Section 32 of the Federal Inland Revenue Establishment Act 2011, penalty and interest crystallize immediately the tax is not paid within the time prescribed by law. So it is not just enough that these people are made to pay taxes in respect of these proceeds of their crime. They also must pay penalty and interest. Now, in the case of Gazprom Oil and Gas Limited against Federal Inland Revenue Service, the court held that a tax liability does not come into existence at the end of an objection and appeal process. Rather, the tax liability established at the end of an objection and appeal relates back to and takes effect from the date due to pay or remit that tax. So, you know, the time that the payment of tax is due is prescribed under the law. So if, for instance, somebody has stolen money in 2019 and is just convicted in 2021, the tax that you ought to pay arose in 2019. So for not having paid that tax, he will be liable to penalty and interest. That's what this provision seems to be suggesting. So these people who are involved in crimes, in corruption, in prostitution, their proceeds should also be subject to penalty and interest. Now, we want to look at taxation of illegality, what we have in other jurisdictions. Okay, now let's start with an African country. We have Kenya. Kenya is very close by here. Kenya taxation legal framework is similar to what obtains in Nigeria. Taxation of illegal activities in that country arose from judicial interpretation in the landmark case of Kenya Revenue Authority against Jaya Towers Limited, where the court held that proceeds from unlawful activities are taxable. The facts of that case, you have the facts there. Because of time, I will not delve into the facts of the case because I'm quite aware that we have done almost an hour. Okay, so in Kenya, it is clear that illegal income is taxable, and that arose from judicial determination, not from legislative process. The tax authority in Kenya is an enlightened one. It is an eagle-eyed authority. I think we can take a lesson from that. Now, in Netherlands, prostitution has been legalized as far back as year 2000. By 2011, the Dutch government announced that it will subject to tax prostitutes operating within its jurisdiction. The Central Bureau of Statistics estimated prostitution generates 660 million euros, about $865 million in annual turnover. So you can see that a lot of money is coming from that kind of business. So in Netherlands, prostitutes are subject to tax. Now, under the Dutch law, prostitutes are required to charge 19% sales tax on each transaction. So prostitution is a transactional activity in Netherlands. Customers typically pay about 50 euro, about $65 for a 15-minute session. In addition, after expense profits are personal income, tax at anywhere from 33% for someone making less than 18,000 euro, which is about $23,000 per year, to 52% for people making more than 54,000 euro or $70,000. In the United States, the courts classify income as gross income. They interpret section 61A of the Federal Tax Code, the sweeping definition of gross income, which includes all income from whatever source derived, to encompass even illegally obtained income. That's what is done in the United States. Move to the next slide, please. So tax filers, the next one. Tax filers must report all sources of income except those which are exempt from taxation by law, including several health-related benefits, workers' compensation, and gifts under the gift tax threshold. However, income earned from illegal activity is not tax exempt and therefore must be reported. That's the position in the US. Now, there is a US case which I referred to earlier. Now, this is the case. United States against Wood. At issue, let me quickly read through the facts of it. At issue as taxable income of or the right to a loss deduction for proceeds from drug smuggling forfeited to the federal government. The district court ruled that the drug proceeds were taxable income and that the appellant was not entitled to a loss deduction on the forfeited property under the relevant provision of their law. Okay, so Glenwood appealed, but finally, because I don't want to waste our time, finally, his appeal was dismissed on the ground that the proceeds were taxable since Wood had exercised complete dominion and control over them in the taxable years. He was therefore obligated to pay these taxes and was not entitled to a refund. That is the position in America. You can just take your time to read through that case. Okay, now we are coming to a close. Should deductions be allowed in respect of illegal income? You note that tax is paid on net income. So there are some allowances that you're allowed to take. Section 6, Schedule 6 of to the Personal Income Tax Act, has some allowance that you're allowed to take, and then when you look at Section 20 of the Personal Income Tax, you will see some deductible, allowances. Now, in Nigeria, treatment of expenses incurred in the production of illegal income is unclear. This issue, like taxation of illegal income, has not been a subject of litigation to warrant a judicial pronouncement. Now, the pronouncement by the Tax Appeal Tribunal, it has been said that the Tax Appeal Tribunal is not a judicial body, but an administrative body. So in Nigeria, as far as I am concerned, or I know, I have not seen any judicial pronouncement on the issue. The only one that I came across is that case I gave to you. That's the case of TSKJ 11 against FIRS. And in that case, deductibility of expenses was not even an issue. So the position in Nigeria is not clear. Note that tax laws are designed to ensure that taxpayers are only taxed on their net income. That is, taxpayers' taxable income for an income year is determined by subtracting deductions from assessable income. The law entitles an individual to certain deductions on expenses incurred by him in producing the income to be taxed, while also granting allowances and reliefs. So you want to see Section 20 and the 3rd and the 6th schedule to the Personal Income Tax Act. It has been argued that if illegal income is subject to tax, then it should equally enjoy the benefit of deductions, especially since tax is levied on income and it is immaterial whether the income is illegal or not. See the case of Southern Inspector of Taxes against J.P. Harrison, it's an English case, where it was held that matters of legality were non-essential when talking about trade under tax law. Excuse me. Okay. So, and then we have said it. There have been different arguments. People have said that illegal income is subject to tax. So if it is illegal income is subject to tax, people have said, then why will it not also benefit from deductions. So those are that's one view, really. Now you need to know that deductions are creatures of statutes. In New Colonial Heights Company against Elverin, the US court opined that matters of deductions entirely rest on legislative grace, and we have seen it that Section 20, of the personal income tax allows, some deductions. Okay, so that's legislative grace. So sources of income is generally irrelevant. We have said that, and a taxpayer cannot refuse to remit tax simply because his business is illegal. So illegality cannot change what can be properly regarded as income. So once it's an income, it's taxable, then ordinarily too, it should enjoy deduction. That's one school of thought. Okay? But what is the position? Now, this first position that I mentioned now, that you should allow deductions in respect of illegal income, is what you probably find in countries like Kenya, probably even Nigeria, because our framework are very similar. You probably find also maybe even in England and perhaps in Australia. But America has a different somebody is saying, can we classify income received by police from of course, it's part of what we are saying. But you see, the challenge is that you have to arrest those police people and prosecute them first and convict them of that crime, because that is bribery. You understand? So when you convict them of that crime, you understand, then that money that has come to their hand, because it's an income to them, then you can tax it. Okay? So another time in the US, an expense must be ordinary and necessary to be allowable for deduction. You can see Section 162 of the Income Tax Assessment Act. The word ordinarily for tax purposes means an expense that is not unique by the custom of a trade. That's a case that I've given you. Okay. Now, this other case, Acado against Commissioner, is authority for the proposition that in the absence of a statute denying deductions of legal expenses in a business, then such expenses are allowable deduction. So illegal expenses are disallowable even in legal businesses in the US. In essence, the US allows legal expenses from illegal income, but disallows illegal expenses. So what are we saying? Some expenses, arising from an illegal action can be what? Legal, and therefore allowable. Then there are some that are illegal, and those will not be allowable. That's the funny position in the US. In Australia, the position is reflected in the case of Commissioner of Taxation against La Rosa. That's the first case to consider the deductibility of losses incurred in carrying on a drug dealing business. The Australian Federal Full Court dismissed the appeal by the Commissioner against the allowance of a deduction in respect of money stolen from the taxpayer. Thus, expenses incurred in making an illegal income is ordinarily allowable in Australia. So there is a query. Bribe paid to secure a contract, or some people pay what they call facilitation fee. Are these deductible? How about a ransom paid to secure an employee's release? Is it deductible? So these are some of the things that we need to consider in this discourse. But the general idea is for us to be able to expand the tax net so that we can bring all these other sources of income within the tax bracket, so that the burden is spread spread amongst a large number of people, because we have said taxation is a commonality. Yes, some people are exempted from tax. The recent amendment introduced by the Finance Act says that people who earn minimum wage or below are exempted from taxation completely. So you don't even have to file any returns in respect of these people. So I just want to thank you. I understand my time is up. I want to thank you for listening. And then in closing, I just want to say that it is time for Nigeria to replicate the global practices as far as process of illegality is concerned. The case of TSKG2 against FIRS already provided some foundation for taxation of illegal income in Nigeria. So Nigeria just needs to build on this foundation. Thank you very much. And I hope that we have been able to take things from discuss. Thank you.